Hello and welcome to this video introduction to our new resources investment strategy. I'm joined with me by our lead fund advisor, Roger Hardacre, and in this conversation we're going to be discussing the aspects and components that make the resources investment strategy. So Roger, if I can begin by asking you, what exactly constitutes resources in terms of this investment strategy that we're going to follow?
I think the simplest way to explain that is to say it's everything that we grow and everything that we mine. Perhaps easier to say everything that we drill for, because of course we drill for oil and gas, all the metals, and 2/3 of everything above ground starts off below ground. So it's absolutely vital for modern day living. Without it, we don't have energy, we don't have electricity, we don't have cars, we don't have televisions, we don't have laptops, etc. These materials are absolutely vital for modern day living.
Now, within that broad description of what constitutes resources, which particular resources will you be focusing on at this time?
At any one time, there's always some resources that look more attractive from an investment point of view than others. And right now, my favourites are precious metals for a number of reasons, but I think we're going to see the biggest gold bull market we've ever seen, and that will bring tremendous returns to people invested in that sector. I like the uranium sector because the uranium price is depressed and demand for uranium is growing. So that's a very exciting sector, and last time we saw that happen, there were huge returns to investors in that sector. And perhaps a more niche metal, if you like, that I favour is cobalt. Cobalt's used in the lithium-ion batteries that are used for electric cars. Now, a lot of focus is on lithium itself, but lithium, there's plenty of lithium around, but there's not that much cobalt. And in particular, we're looking at one near-term producer in Australia that's run by a guy who's made thousands of percents for his investors in previous endeavours.
I mean, interesting you actually mentioned a producer rather than the commodity itself, and I think that's such an important theme to get across to viewers, that we're not going to be investing directly in the commodities, the physical commodities, but rather in the producers of these commodities, in shares as such. And why invest in companies rather than directly in the commodities itself, which of course you can buy and hold?
Well, the answer is simple. The upside is much greater if we buy the shares of producers. But it's not just producers. The biggest gains are going to be had from the companies that are developing resources or exploring for resources, where you could possibly see thousands of percent upside.
As companies that are actually given a license to find this particular resource.
Yeah, I mean, producers, they need to continually replace the reserves in the ground. So companies are out there looking for new resources. It starts with exploration. Once they find something, they then have to develop it, and that's generally left to small companies to do that the producers then go and buy.
Okay. Now, one of the features, I was going to use the word unique, but I won't use the word unique, but one of the main features of the Vantage investment strategies is the fact that we, from outset, are prepared to put our heads above the parapet and actually state a targeted return, both in terms of the resources strategy and, of course, for Predator, which we'll cover separately. But for resources, it's quite a spectacular return, isn't it, Roger?
Well, we're saying our target is 100% upside in 3 years and 200% over 5 years. Now, for most investors, that perhaps sounds a bit too good to be true. Most investors are happy to get 10% per annum if they can. But these sort of returns in an upcycle in the commodities sector are absolutely normal and expected.
And of course, we should make the case that you yourself, Roger, are a highly experienced investor in this market and an advisor to clients in this sector. I think you've been involved in the sector for over 20 years, so I guess you've seen more than one cycle.
Yeah, I've seen a couple of up cycles and a couple of down cycles, and I can tell you down cycles are very depressing. If you're invested in that sector, you will lose money, possibly a lot of money. But on the other hand, the up cycles are spectacular as well, and you can make huge gains in a relatively short period of time, which I think is 3 to 5 years.
Yeah, and in terms of the beginning or the signs of a new upcycle, you have the highest conviction that that cycle, that upward cycle, is about to begin.
Absolutely. Bear markets beget bull markets, and bull markets beget bear markets. So we've just had a very long bear market, 4 years, where it's been rather depressing to be involved in the resources sector as an investor, but it's turned around and prices are moving up. So I think this is the beginning of the next serious bull market, which will run for 3 to 5 years.
So the message here then is that yes, a volatile investment sector, a sector that is cyclical, and where we believe that a new growth cycle is about to begin. The train is very much in the station. If you're interested and would like to find out more, then please follow the link to our website, where you can contact us and arrange to speak to myself, Roger, and other members of our team. And if you wish to sit down for a face-to-face meeting to explore this further and find out more, then obviously please do contact us, and we'll be very glad to talk with you. So Roger, thank you very much, and thank you very much for watching and listening. Thank you. Goodbye.
Goodbye.